Takes 9, the first voice you will speak to. That's the melodious tones of our producer extraordinaire, Jimothy. Good morning, my brother from another mother.
Hello, and good morning, Johnny. How you doing today, bud?
Very well. Good to see you, my friend, as always. And yes, I am Johnny C., your old buddy, your pal, your air traffic control on a Saturday. Let's go ahead and get your starting lineup on a Saturday morning. Come on in to the mortgage guy from the mortgage firm, my friend Mike Rauch. How are you, Michael?
What is up, my brother?
Nice to see you.
Good morning.
Morning.
I think that was me with the feedback. Did you hear that?
I did
for a second.
Yeah. But you were quick.
Yeah, I heard it. I said, wait. I looked around and then I was like, oh no,
That's me.
look in the mirror, Johnny.
Nice.
Look in the mirror. That was me. Good morning.
Starting with the
Yeah, that's right.
Yeah.
Man in the mirror.
good job.
Yeah.
Nice to see you.
Yeah. Good morning.
Happy Saturday.
Oh, great. Happy Saturday.
And happy Saturday to everyone listening. And of course, happy Saturday to our fearless leader. I've told you for 11 plus years now, he runs a top producing Keller Williams team at the Florida Home Pros team. You'll find my man, Jimmy D. You still with Keller Williams Innovations there in Boynton Beach, Jimmy D? Or things going chaos?
I am still at Keller Williams Innovations. I'm
All
on
right.
the leadership council down there.
Yeah, I had a feeling everything was the same. I was out last week, so things can go awry.
It was kind of cool. I did my first training class over there for the first time. I used to train over at the other office all the time, be a trainer.
Let me ask. You were doing the training?
Yeah.
Or are you in a training?
I was the trainer.
Oh, gotcha. Yeah,
Yeah,
because there's
yeah.
both.
Yeah,
You-
exactly.
You have
It's
lots of training opportunity.
Keller
and-
Williams, you could do training every single day for the rest of your life and still not get through everything.
Right.
And they have this. Keller Williams has the most acronyms I've ever seen. You know that, Johnny.
Oh,
You
yeah.
know,
Yeah.
More
They
than
have- they have acronyms for everything.
Everything.
I was like, oh
more
my
than
God.
the government.
I'm sorry.
More than the
Wait,
government.
actually, I think. Well, no,
DOD.
not. It's
TDY.
no. If you add state and federal, maybe
I
not.
just usually reminded me. Both my parents worked for the government, so they like dinner conversation. You would hear all different acronyms, like the
Oh
the-
yeah,
like the-
yeah. Defense. You can't
Yeah.
get more than the defense and more acronyms.
I'm trying to think. Those two that just popped in my head.
I
but
think
yeah.
they have acronyms for acronyms at the
Yeah,
defense.
Yeah, of course. Of course.
Pretty much.
Pretty much, right? And then, I remember when I was at the newspaper, one of the things we couldn't put in the newspaper was SNAFU,
Snafu.
right? You're not allowed to put that in the paper back then, right? And there was a big thing about it because a lot of military vets were writers back then. So they're like, what's the big deal? But it's what the acronym stands for. So
Oh,
it's
so
to-
here's the. I
so
learned
they won't-
something
they
every
wouldn't
day.
put it
Did
in
you
the
know
paper.
Snafu was an acronym?
No, I did
Jimmy.
not.
I didn't either.
Oh.
I actually thought it was
Snafu
a word.
was
I thought it
like
was
a-
like a
Oh no, situation normal.
Yep,
All
Effed up.
really.
all
Oh,
effed
that's
up.
right.
6 or 8 normal, all effed up.
I have heard that in the past, but
So-
I never put the acronym.
So we
together.
couldn't put that in
Gotcha.
the paper.
Okay. All right.
I wonder.
And it was a debate. Some people was like, why can't we put it in the paper? Nobody even knows what it means anyway.
I guess a hidden one, but you couldn't write in the paper just straight up "fu." You couldn't do that.
No,
right?
you couldn't
So,
write.
Same kind of
Yeah.
that same category, I
Yeah.
would think.
Yeah. No. Now that I
Yeah.
know that, yes.
Yeah.
Yeah, I understand.
What's the other one that's kind of like a snafu, but it's military?
All I know is catch
Fubar?
22.
Yeah, FUBAR.
Oh, FUBAR.
Oh,
Yeah.
yeah.
I forget.
Beyond all recognition.
Yeah.
Oh,
Yeah.
okay. Yep.
Yeah.
So anyway, so Keller Williams, they do have a lot of acronyms and everything over there, but they also have a ton of training. And I was doing a class on calling from contribution, being able to call people and discuss how you were able to help them.
Yeah.
One of the things that agents have is what people don't understand when they become agents is that they don't understand that it's a business. And when you start out, everybody just thinks of the license and the commission and that magically they're just going to get commissions in their bank
Yeah,
account.
yeah. As soon as I get my license, the phone's just gonna ring.
Yeah.
Listings are just gonna appear.
Right.
Yeah.
I'm going to know exactly how to go out and find properties,
Right.
negotiate properties, write contracts.
It's easy money, Jim. You just
Yeah.
get
Oh,
licensed.
it's so
everybody
easy,
starts
right?
Raining.
Come on. I'm just gonna
So
hang out at the beach.
yeah, so one of the things that you're trained to do is to reach out to people to ask them for business, right? And that's where everything gets crazy. So one of my agents at the time used to call the phone when it was time to make phone calls, right, to people. He called it the 800-pound object. right? Because he didn't want to pick up the phone to make the phone calls because everybody gets all freaked out. And one of the things I learned from being on the radio show and dealing with the audience for so long, that if you call from contribution, meaning you're calling not to try to convince them to do something,
Right.
but you're calling just to see if they have any kind of needs out there, and not
What can I
just
do for you?
yeah, what
Yeah.
can I do for you, and not just like what can I do for you that will benefit only me, but if I can help you with other real estate needs like mortgages or insurance or lawyers or probate people or title company people, student loan help, which by the way, I think one of our customers needs student loan help. Mike, I'll tell you about that.
Okay.
And
Well, that's just it. So, I mean, you might be like, oh, I need a contractor, right? Next thing you know, they're talking with Pete Walsh or something, right? I mean, it might not be anything that you're like directly tied to, but boom, oh, you need something? Yeah, I have that something for you. Here.
this week alone, we gave out 2 contractors to customers who just needed help, and they were like, "Hey, can you get me somebody to help you?"
Sure.
So what
Who do
we
you
did
trust?
was, oh, by the way, I'm going to put this out to the radio. Last week, we made a commitment that this is going to be the year where we really want to find out everybody in our tribe, our database, if you will,
Right,
of
one of
Florida
us.
Talk Real Estate. How many people are small business owners or somebody who works for a great small business owner, to find out about their businesses and the areas they cover, because our show covers a pretty wide area. We do everything from basically Vero down to Dade County. So if you are interested in finding out more about how we can promote your business, even for free, okay, we're not asking just to do it for sponsorship or anything, please reach out to us. We just sent out, Mike, we just sent out a database call to action to find out our vendors, and we found out we have almost 200 business owners in South Florida that are in our database, and
That's
we're
just based on response, too.
yeah, and that's just based on response. So anybody out there that's legitimate business, I'm telling everybody right now, we're going to check the Better Business Bureau and the Consumer Affairs for the county, for everybody, just to make sure they're all legit. And as long as
You
you're
could be legitimate and terrible.
well, you could be legit and be off the radar, if you will, but we want to make sure that the listeners are taken care of, because if we're going to have you
Yes.
on our list and we're going to refer you out, we want to make sure that there's some kind of standard and you're not just like anybody.
Right.
So
Right.
You
So-
could do like a makeover my house, so I can determine the quality of your work type of thing, right? Right.
yeah,
Like, are you a painter? Come paint my house. Let's see how good you really are, right? Type of thing.
Yeah, totally. When you're to my house, I'll volunteer.
yeah,
We
exactly.
got some project homes.
I think-
Timothy's not going to need anything.
I
No,
think
right.
I think that's how they do it in
Anytime
Russia.
soon.
Yeah.
I think that's how they do it in Russia.
Got any
Lots of-
fence builders?
Yep. Hey, if you want the
Build it, let's
contract,
see,
right.
there was a guy like that in Fort Lauderdale that I busted when I was a reporter. This guy, he was in the engineering department and he had to sign off on everything in Fort Lauderdale. So they needed to do some water feature in the city. And so he told the construction company, sure, you'll get the bid, but put a hot tub in my house.
Sure.
So they
sounds
put
legal.
in like a $20,000 hot tub with a big expensive deck and everything in his house for free, so they could get the contract.
you say
Nothing
in?
wrong with that,
Like
right?
he put it in his house?
No, in the backyard.
okay.
In the backyard.
I was like, that's good right there.
The old indoor
So,
hot
That's
tub.
yeah,
like Prince Hakeem
yeah.
from Coming to America. You know what I'm saying?
And
Put it in. this
Wipe
bad boy.
us.
it's kind of funny. Okay. We have Mava on the line because we got an open house this weekend. So
Yep.
let's go ahead and talk to Mava.
Let's do that. Open house details.
That's
Fantastic.
right.
Mava, thanks for your patience. Welcome. You're on Florida Talk Real Estate. How are you?
I'm well. Thanks for asking. How are you guys doing?
Morning, Mava.
Good. Everybody's good.
Excellent.
I see smiles.
Mm-hmm.
Well, featuring Jim.
Nice.
Hey. Hey, Mava, how are you doing today? Mava Gachet with Keller Williams Innovations. Mava's on our team. Where are you going to be doing the open house this week, Mava? And what day?
I am going to be at 715 Glenridge Drive in West Palm Beach today. That is in between Forest Hill and Southern, just east of the highway, near the zoo, and 0.9 miles away from the Intercoastal. I'm doing the open house today between 12:30 and 2:30. So the
12:30?
house that we're selling, it is a 2-bedroom, 1-bath. It's about $325,000. and it's about 700 square feet, 750 square feet. And I really like this home. It's like a really cozy home. It's near the intercoastal, so if you're like a jogger or a bike rider, you could ride up to the intercoastal and just along it and come right back, and you'll still have enough steps for
Nice.
the rest of the day.
And even if you're not, if you're neither, you're still right there. It's nice. It's beautiful.
You don't have to be a jogger.
Right.
No, but I
But
like
it's a
that though.
good
It gives you like a visual of what it could be, right?
Absolutely.
What the lifestyle
Or
could
what
be.
it doesn't have to be.
We our team just showed the property. I think it was on Thursday, and the couple, what they really liked about it was the neighborhood is awesome.
Yeah.
And every house is different in that neighborhood, which I really liked, as you know, Mava's walked it many times. And the other thing is that if you're not really need size and you just want like cool, this 1949 house has Miami-Dade County wood pine. I'm sure even the ceiling joists and everything are Miami-Dade County pine back then, right?
Wow.
So it's built really strongly, and it's got this great backyard, but you could turn it into a really cool, like historical flavor, Florida kind of lifestyle, almost like a Key Westy
Yeah.
shotgun house. You know what I mean? Like that.
Nice.
Excuse me. So make sure you go out and say hello to Mava for the open house. Can you tell us one more time the address and the time, Mava?
Absolutely.
Thank you.
It is at 715 Glen Ridge Drive, and that's West Palm Beach, Florida. If you need the zip code, it's 33405. I'll be there today between 12:30 and 2:30 p.m. So I hope to see you guys.
That's
Not you guys, but the audience.
That's awesome, Mava. Mava, we were just speaking about, I don't know if you got to hear it, about trying to make phone calls and stuff and being a new agent, which you are, and you've been working with us on the phone calls a lot. So if you ever get calls for the listeners here, if everybody get calls, it might be Mava and not just me saying hello to you and seeing how we might be able to help you.
Very nice.
But what have you learned from calling our database from the radio show over the last month or two? Have you had any aha moments about the listeners here and stuff?
I have. I've noticed that a lot of people that I reached out to actually does listen to the radio show, and that they listen like every Saturday. I've also had a few people that were just so excited that I'm working with Jim. They're like, oh yeah, I would love someone to give me a call back. I would love to, see what options are out there. And it gives them a sense of security, kind of, because they know who you guys are. They feel like they're connected with you, and that you know who they are as well. I've had people tell me they spoke to Johnny. I've had people tell me they spoke to Mike. So it's like, it truly is a one-stop shop. So it's a really good feeling.
Well, thank you, Mava. That sounded like I'm going to have to give you a bonus or something. I
that
guess
a
for that, it's a
script?
commercial.
Was that a script?
I know,
That's
did
an
you just do
amazing
a
answer.
commercial?
Didn't even sound like you're reading that.
It's
I
so
think she
funny.
actually summed it up pretty well, right? Like we built
Yeah.
this
Yeah.
relationship with the audience over how many years now, Johnny?
11 plus.
Yeah, 11 plus
Yeah.
years, and it's like they feel like they know you, and you feel like you know them a little bit, even if you never talked to them.
Yeah,
right?
you want a little landmark? Here's just a little landmark check in your brain, right? Today is my 11-year wedding anniversary,
Wow.
right?
Wow.
Today?
Yeah,
Wow.
today. So
Boom.
Congratulations.
put my
Happy
wedding
anniversary.
anniversary in our timeline, right? Because
Right.
I know you can.
Yeah.
And you're like, wow. So that plus is definitely some plus
Yeah.
in the 11 plus.
Yes, it is. It
Yeah.
is.
Timothy, do you have like a death march drop or something?
Well, Mav, I know you got to get ready for the open house. I hope you have an awesome weekend. And do me a favor, sell that house.
Come on now.
Yay!
Thanks. Bye-bye.
Mom is awesome. So details on that open house that we just heard about.
Happy anniversary, Tiffany.
Well, that's that on the Facebook page. We can find that all that information.
Yes, on the Facebook page, 715 Glenridge Drive in West Palm Beach.
Florida Talk Real Estate on Facebook,
Yes.
where we are live streaming as well. Thanks
Yeah.
for being with us if you're doing just that this morning.
You know, it's funny. I think both of us had the same song in mind when I said the Death March, but it turned into Star Wars, right? Right? 'Cause we were thinking dun dun dun.
It is very dark side.
Yeah, it turns, but it's a different song. We both had it, and then
Yes.
it turned into the Emperor's, song.
That's fantastic. 877-927-6969. If you have a question, comment, concern in the world of real estate, you want to be a part of the program, you're more than welcome to. If you're not comfortable on the radio, I totally get it. I might be one day. That's why I will always remind you, Florida Talk Real Estate is .com. Your one-stop real estate shop, access to the entire team, pros. You get them all at floridatalkrealestate.com. You'll see the hotline there as well, 888-973-7828. That is answered 24 hours a day, 7 days a week by a live body. You can try it right now. If you don't believe me, 888-973-7828. Find me at floridatalkrealestate.com.
Sorry, Jen.
Yeah.
I had a step. I haven't
Yeah.
stepped in a while.
It's step on it.
dyslexic.
It's nice to have you stepping.
Hey, we were just talking about how we build the relationship with the audience and everything. And this leads us to the shout outs a little bit. And I want to give a shout out to Muriel. Muriel's been a long time listener, and she had 2 houses to sell, and she's going to be moving to South Carolina. She's a little stressed about it, making sure everything goes, because she's the typical seller buyer where she needs the proceeds from the sale of at least one home to buy the new home of South Carolina. She's working with Mike to buy the home up in South Carolina, which is awesome.
Yes.
I gave her some advice, Mike, on this, and this just shows how we do things a little differently for people to try to solve as many of their needs as possible. So Muriel told me yesterday, I think it was, that the shout out is, I'm sorry, let's start off. We have 2 houses to sell. We put the first one on the market. It was 3209 Southeast Pinto Street. It was a 3-bedroom, 2-bath pool home in Port St. Lucie, about 1,600 square feet.
I noticed you're saying was.
Yes, because we had the house on the market in 4 days and we sold it, so it's gone. So we didn't even get a chance to do the open house.
Mike was thinking it burned down.
No.
Oh, wow. That's extreme.
No.
Yeah.
Sinkhole?
Somebody drove it away.
Oh.
So sinkhole. There you go.
We're taking it
So-
with us.
So that house 4 days under market. We did put it under full list price when we took the offer. We had multiple offers actually, but because of some repair issues and everything, we did have to do a reduction. The seller said, sell the house, I don't care, because she's so nervous, and the price is well within the range of what she was hoping for, but she's really more focused on getting the house up north. She found a couple now, Mike, that she said she would have bought in a second if her houses were sold, both of them.
Yeah.
So this is the conversation I had with her yesterday. I said, Muriel, if you had hired us to find the agent in South Carolina that you're working with, that agent would be talking to us very carefully about everything that's happening down here so that you could get ready up there to do everything as a seller buyer where you don't have any downtime. I'm wondering if you have enough equity from the sale of the first property that you don't need to have the second property sold in order to buy the home that you're looking for in South Carolina. She goes, oh, I didn't think about that. So she's going to reach out to you, Mike, and see if selling one home will give her the ability to still buy the house up there. Now, there might, just talking in general, not about Muriel's, there's sometimes the answer would be no, because she might have a mortgage on the second property she's selling, and she might not be able to carry 2 mortgages at one time or something.
Yeah.
But anyway, I want her to check that with you, because if that's an opportunity, she's very stressed out. She's going to lose her dream home up there if both houses aren't sold down here.
Well, you can kind of set up loans to where they're like really like contingent, right? In a way, am I wrong? I might be making
You mean the
stuff up.
contract contingent on like selling the homes?
Well, no, but like in a refi situation. So like in my refi situation where it was good as long as I paid certain things off, like there was an obligation, wouldn't the loan kind of be set up in a similar way where it's like, hey, you're good here. for this amount as long as this happens?
I would say in general. So take the simple case where she has to sell her home in order to have any proceeds to use for the down payment percentage. I think in Muriel's case, it's like, I'd really love to do, 60% down, right?
Yeah.
Or 70% down.
Throw as much as I can at it.
Right. Just the smallest loan with the resulting smallest payment.
Sure.
In her case, she has 2 properties that are kind of going to combine to make that, big down payment.
Beautiful.
And that's our ideal. But if, can she do a 35% down instead of 70% down with the proceeds from one sale? And then maybe at some point in the future, do like a principal reduction once that second loan or that second home sells. That's kind of what I would be thinking for her. So I know, just because I'm familiar with her scenarios, she can definitely do that. Like, as long as she has the proceeds from one of the homes, she can get qualified for the loan.
Oh, so where I'm getting lost is the down aspect. I was thinking when Jim said the second, I was thinking that being in the way, another mortgage being in the way, but I was convoluting it so much in my head.
Yeah, I think more it's like, so what do you qualify for if you're if you're carrying a mortgage obligation on the homes and everything like that? I thought maybe you were talking about a bridge loan, which is another style of loan that people use to kind of bridge the gap between selling and buying,
which I've heard you mention
more
than a handful of times.
Bridge loans are out there. They cost money, and it's usually a short-term thing. So I usually would say, if you had to do it that way, that's an option. If you can figure out some other way to do the seller buyer without another loan product, it's going to be smoother.
That's kind of why we've created our systems, to try to avoid the bridge loan.
Right.
Not that bridge loans are necessarily bad, but they cost you extra money. The other thing is that's why you try to do the simultaneous close.
Right. Yeah.
Because what happens is, what people don't understand, they don't think about like the chess game, but we've seen it over and over again. If you can't close on the same day and you got to move your stuff out of one house, and now you don't have a place to put it, right, into your permanent house, your second house, your new home.
Yeah.
Then you got to figure out, where am I going to put this stuff for the little transition period? And it's expensive. Moving companies, storage companies it's expensive to store it even for 2 weeks. I had a family, Juan and Saray, thousands of dollars to hold their property for like 2.5 weeks. Thousands, right? So you try to avoid that, because it eats up some of the equity that you have in selling the house. So that's why we try to do what's called the simultaneous close, where you're selling the house on Monday in the morning, and then you're getting it. Then you're taking that money and buying the new home Monday afternoon,
right,
and getting the keys to your new home. That's what you're trying to do, and that's what we accomplish all the time. But Muriel hopefully will be that. She did. Congratulations to her about going in contract on Pinto. We're already done with the inspection.
Awesome.
Now we're on to the appraisal. Everything's looking good, and we'll be putting her other house, a 3-bedroom, 2-bath house, on the market probably next week, or maybe the week after. So on to number 2.
Awesome. That's
okay.
That's exciting.
Just want to do a couple other shout outs. I wanted to give a shout out to John and Katie. We had sold their house on Orange Street, a 3-bedroom, 1-bath home, about 2 weeks ago. We put it under contract, 7 days on market. We got slightly above list after the smoke cleared of the inspection and the appraisal. We're going to be closing a little bit above list, not much, but a little bit.
Still.
I think it's 100.5%.
Beautiful.
So, but anyway,
that's better than the 92 or 93% average.
Yeah, actually, that's true. So congratulations to them. Thank you for trusting me. And then we put their second house on the market, and we put that house on the market. We took a deal. The deal fell apart, and then we put it back on the market. So this one took actually 35 days to go under contract, but that's 35 because we had that downtime where the house was under contract, fell apart. So everything's looking good with that one. We're going through inspection on that, and everything's looking good there.
Nice.
Also, I wanted to do a couple of shout outs to buyers. Yes, there are still buyers in this market.
I hope so.
We're going to be talking about that.
I need you buyers.
Well,
I know.
Hey,
it's so true.
on the other side of these sale congratulations, there's a buyer, right?
Exactly.
Yeah.
And that's what you have to keep in mind. And it is, we're going to be talking about the interest rates today, because it's big time news. But I almost feel like you're Ross today, Mike.
Why?
because of the bad news you're going to be talking about. Like Ross comes in all depressed all the time. Yeah, Ross comes in
so
grumpy all the time.
exciting. Mortgage rates at all-time highs, right? But Johnny, to your point, like you just mentioned Muriel, so she's a seller and a buyer. Looking for some and moving out of state. And then John and Katie also buying out of state. Luckily, I'm in the states that they're moving into, so I'm able to help them out. Yeah.
And then we have the 2 buyers. So David, thank you for signing with the Florida Home Pros and of course Mike Rauch to get his new home. Now, I want to talk a little bit about these buyers because people are saying that it's a horrible time to buy. So I think it's kind of interesting to find out why buyers are buying in today's market. There's a million different reasons, but everybody's so focused only on interest rate and here in the market's really tough that people don't realize that there's still needs for buyers.
Sure.
So David's kind of interesting because, we've dealt with a lot of customers like this, but he's in his late 50s and he's a first-time home buyer.
Oh, that's
in
great.
His late 50s. He's a city worker out in Central West Palm Beach County. And the reason, and I asked him, why are you buying now? And he said, you know what? First of all, rental rates are going up so much.
That was the first thing that came to mind to me. It's like, well, why do you buy? Well, because the alternative is renting.
You're renting.
Yeah.
Why not buy?
Yep. And he also,
Thank you, Mr. McMillan. Right?
And
Is
he
that his
also,
name? That guy's name? McMillan.
I don't remember it. No,
Come on, Mike.
I don't know. Never
I don't
knew
know.
that.
Yeah, I don't know that
ran
one.
For president.
Oh,
he ran for president.
Oh, can you run it again?
And he
rent. It's too damn high.
That was like his lead.
Oh, I can't remember. Oh, yeah.
McMillan, you're right. Jimmy McMillan.
It was, wow, that's pretty good.
Yeah. What year was that? The rent
88?
Too damn high guy.
No, it wasn't
Did we get any
88.
drops like that from the debates the other night?
2005, 2009.
I don't know. I doubt it.
I think
Anyway.
That was when he ran for mayor.
I think DeSantis tried to get a couple of drops like that. Not to get too political, but there was a couple. He's like, we're gonna get him dead to rights or leave him stand. I forget what he said, but it was definitely soundbite
hoping to
territory.
Get one to land.
2010, it looks like.
2010.
Yeah.
All right. Nice.
Did you watch any of that, Jim?
I missed it because I was in a deep conversation with somebody. I'm going to watch it this weekend because I'm psycho like that.
Oh,
you missed up.
So
the rent is too damn high.
Yeah.
Though. Still too damn high.
Still too.
All these years.
So getting back to why Dave bought. Okay, getting back to why Dave buying right now is Dave was tired of the rent, but also he was also tired of watching price appreciation. And he's been thinking about buying for years and years and years. And he kept hearing, when the interest rates were low, he felt the prices were too high. This is very common with buyers, right? When the interest rates started going up, they were waiting for the prices to go down. Didn't happen. So he was just tired of watching the appreciation on properties over and over again. So what he's decided to do is to get a very modest condo. His budget's around $150,000, right? And he's going to buy a condo and protect himself from rent increases and also get appreciation over time and get tax benefits, right? He's even talking now, Mike, about talking to you about maybe 15-year mortgage. Okay, so he's going to talk to you about that also, see if that's a possibility.
Sure.
So anyway, that's why. David, thank you for trusting us. We're going to do a great job with you. And then we had Janet. Janet's kind of interesting. She's also a first-time buyer. When we sat down yesterday for the consultation, she's a relative of a family that I've done 4 transactions with now. And so we have a track record in the family. And yesterday we sat down. We found out that she's very realistic of what she could afford. She wants a single family home, and in her budget, which is in the low 300s, right? St. Lucie County is the best place for her to be, especially because she's in northeast Palm Beach County for work. So going south is too expensive for her to get the single family home in a non-crime neighborhood, right? Not a high crime neighborhood. So the best option for her is to do Port St. Lucie. And the thing is, if she stays around Becker Road, right, the commute from Port St. Lucie to where she works compared to West Palm to where she works, almost the same
About
amount.
the same.
Yep. So she was very realistic. She's okay with Port St. Lucie. Now, even in her price point in Port St. Lucie in the 300s, when we did the search, how many viable properties do you think there were for her in Port St. Lucie?
Wow, 30?
Go ahead, Joe. Yeah, look at you.
15?
I don't know.
Yeah.
I'm gonna guess 7.
Because I told
20?
them 7. There were 7,
Oh,
right? So in her,
That's it?
that's it. That's how tough this market is can be, right? But here's the thing: the teachable moment. Out of the 7, Janet has requested to see 6 of the properties, right? Because she's realistic that at her price point, she's not going to get the super Mac Daddy totally fixed up unit. What she's looking for is something that's in excellent condition, hopefully newer roof, newer AC, with everything, functioning and livable. And it doesn't have to be super Mac Daddy, and that she knows she's locking in. And why she's doing it now, she's tired of the rent. And we figured out in her budget, she'll be paying about $1,000 a month less than the rent she's paying now.
That's great.
If I'm remembering correctly, and I confuse these, I have a lot of this conversation. People who are renting now, and they say my rent went up $500 this year, right, or something like that. Like, and a lot of it's like, how can they do that? And you just think, well, their costs probably went up. Like, landlord
Insurance went up. Insurance went up. Taxes went up.
They needed to. They can. Like, it's tough. But I've had that same story, right? When my rent just bumped up and knocked me out of my comfort zone, right? Out of my budget.
Yeah. And so here's an example where somebody's going to potentially save about $1,000 a month compared to what they're renting. They're going to get the benefits, the tax benefits of owning a home. They're going to get the protection, hopefully, of protecting increases in the future that are out of your control, that you don't have control of. She gets appreciation over time, and there's a lot of benefits. So the people out there that are really frustrated and say, I just don't want to buy right now, the news articles nationally are saying right now they're not expecting price drops. In fact, one of the articles we're going to talk about today is nationally, they're saying that the housing recession is over.
There was a recession?
Yeah. In Florida, we haven't been really touched by it. Actually, we're starting to slow down a little bit now. The nation's been slowing down since February. So from February to August, or it's February through July, it's been very slow nationally.
That's how they technically call it a recession, because the numbers have slowed down?
Well, yeah, we went from 6 million. We went from an average of 6 million sales a year to 4 million sales a year.
Well,
that's a big drop.
Yeah, I guess I can see that just as a technicality, but that's not the way I view the recession. For me, a recession would be we're starting to see the bottom fall out of the market. When values start getting affected, now I get into the recessionary aspect.
There's different layers of recession. There's light recessions and heavy recessions, right?
No, I get it. Just on the mere fact of slowing down, but
you just got to squint your eyes a little bit when you read it.
Well, file that under. Duh. Thanks for following along. I just don't think you're there to write the article.
There's not a lot of economics majors who are writing headlines, for online news sources.
Yeah, you're right.
Like, so.
But way to follow the market for the last 2 years.
But what about the values across the country? I mean, obviously here in Florida, they haven't.
The values. So the values have been dropping since February through June. They dropped nationally. We had sales drop. Their sales nationally weren't as bad as our drop. Nationally, we're in the 30s. They were in the 20s nationally. But they had price depreciation. Florida had price appreciation. So we were different than the rest. But from February through June, they had price depreciation. Last month, they showed a 1.9% year over year for the month increase. So they're saying that they think they're pulled out of it. I don't believe it, just so you know. I think we've got pain coming, more pain than we're in now, or the same pain we're in now, and it's not going to let up for a little bit. Maybe it won't get worse, but it's not going to let. We'll get into that in a little bit.
But the pain we're in now, though, is it interesting? Like, it doesn't feel like it's market necessarily pain. If you're a homeowner right now, you think it feels like pain?
From an insurance perspective, sure.
Well, in Florida,
yeah.
Well, there's a lot of things going on. There's people. It's the homeowners insurance. Property taxes are going up. Homeowners insurance going up, and then on top of it, some people would like to take equity out of their home, but then trying to do so, they kind of feel like their equity's trapped unless they do like a refi where they're going from very low interest rate to very high interest rate. To get that money's very expensive.
Oh, it's
for
trapped.
some people
as
right
we
now.
talked about a couple weeks ago. Once
So-
that starts happening, once
so-
people start refining and do like double their interest
Yeah.
rate, that's where the hurt's coming. Remember, that was a big point of emphasis from a couple weeks ago. That for me, that's that huge tipping point. Once Mike starts going, man, we got
Get
a lot of
requests
refi
for
coming.
weird refis.
Yeah.
I want to tell them no, but
Cash
they're
outs.
insisting.
Yeah, here it comes.
Yeah.
I saw an ad. I don't mean to step on. I saw an ad last night, and this kind of goes to Johnny's general idea about credit and spending and consumerism. But it was a home equity product, but presented as a credit card.
Whoa.
Right? So, hey, you could tap into your equity, use your equity, but guess what? We provide you this credit card, and you could just, swipe, whatever. Instead of going through the hassle of going to your bank and filling out a form to pull out money, you just have your credit card, which I guess is kind of like a novel idea, except that the home equity, most people aren't using their home equity line of credit as
To go
a
shopping
credit card.
To go shopping at the
it's
grocery
like-
store.
Yeah, exactly. Because you don't really, yes, you have a payment on it, but most people are making the minimum payment. They're not like paying it off like you would a credit card. And so
that kind of pisses me.
That's scary.
Yeah,
It's-
you know,
it's-
because you know what it reminds me? It reminds you Countrywide, right?
That's
And
very
that by the way, Angelo Mazzillo passed a couple weeks ago. I should have brought that up when it came out because he was like the face of the crisis that happened back then. Countrywide, everybody does remember, was this company that did a lot of refis and a lot of mortgages that stated income where if you fogged the mirror, you got the loan. And they were the
Super
great
predatory.
majority of those loans. And then he crashed the whole system. Thank
Super
you,
predatory.
Angelo.
Super predatory. Yeah.
well, they allowed it. They
did.
Yeah.
Yep.
But what happened back then, people don't remember, but there were commercials all over the place back then. Hey, do you want a new car? Do you want to go on vacation?
Yeah.
Easy. All you got to do is take out money out of your equity of your
It's
house.
your
get a
money.
new boat.
Yeah.
It's
Yeah.
your money.
Yeah.
So I get like it to me, it's scary. And I know
Crazy.
it's basically just like a lead generating service. And maybe they
Yeah.
have a special product, but it's like call now to see
Wow.
how much you're going to be pre-approved for. So it is a traditional home equity product,
Yeah.
but presented as like
A revolving
the new way to
credit
do it,
card.
right? Like the new way to do it. And all of a sudden
Oh, I
you're
hate
just,
it.
and then that's the idea. You spend like you swipe, you're just swiping all over town.
Well, Jim nailed it like instantly. Didn't even take a second to
Yeah.
get there. We see how credit cards are devolving, how they're being used. It used to be this like credit builder. It's just we can access it when we need it. We pay it off like you used it responsibly. It's devolved massively in this country to where it's like how we depend on paying for basic services like groceries.
Sure.
And we're
Yeah,
seeing
yeah,
it more
yeah.
and more and more and more and more. And now they're like, hey,
And you remember, like
use the
Jimothy's a good
equity in your
example because
house to buy your groceries almost without saying
exactly.
it.
Yeah,
It's-
exactly.
oh
What
my
you're saying.
God.
Jimothy did a home equity loan on his house at some point in the past. And I remember talking about it. I was like, here, listen, so you don't get stuck on this type of thing. Treat it like a car loan, right? Like give yourself a specific period of time to pay it back, calculate what the payment is, and you'll have the thing paid off and you won't be stuck with
But it was presented like a credit card. It was
Oh.
a very similar type of thing,
It-
but there was a cap on it.
Yeah, and it's like, well, I even tell people like a home equity line of credit is like a big fat credit card
It
because you
is.
can use it and pay it back. But the truth is, people don't use it and pay it back like that unless you're like maybe investors' specific purpose. I could see that, but most people are using it to buy something
Right.
and then they want to pay it off over time.
Yeah, I had a specific reason for it. I
Yeah.
didn't go
People
beyond
use
that.
them for a pool. They put a pool
Sure.
in. They
Yeah.
take the home equity line of credit, build the pool, and then they just use that as almost like a second mortgage payment
Improving
on
the
the pool.
house is a great probably
Sure.
use of the equity of your home,
Yeah.
right? Because you can at some point, get that value back.
Yeah, because
But-
the improvement, you get some improvement value.
Right.
We're going to get into a couple of those things later into the show. We're going to talk about defaults on credit cards and stuff because we had new figures come out just recently. We're going to talk about what's happening with inflation. We had a little bit of a stock market little tizzy fit over some language that the Fed said about whether they're going to raise rates in the future. We had two different realities on that one, tale of two stories again. And
It's
we're
a
also
tale
going to
of two
talk about
stories.
buyers of the pain from the buyer side. We talked a little bit about the seller or homeowner pain. We're going to talk a little bit about buyer pain. But I want to do one more shout out if you don't mind.
Sure.
Are you sure? Is that okay?
Yeah.
You have the third shout out. So I wanted to congratulate Jim and Carla,
Nice.
who got their house under contract. It took us, according to the thing, it was 6 days. Jim, we had multiple offers on the house.
Yes, we did.
Right away.
I think it's James.
total. Correct.
Yes. We were on day 4. Jim actually said to me, "Hey, do we have to continue to show the house?" Because there were so many showings scheduled that he was tired of showing the house.
It flooded. I mean, in a matter of a day, I think there was a total of 27.
Yeah. So we're going through the inspection right now.
Disruptive.
Yep. So
It
now,
can be.
now we're in the inspection phase, so we're going to go through that phase and see how things are going to go there. And he's on his way to become a seller buyer because we have everything mapped out right now where Jim is going to give the keys to his house to the sellers or to his buyers the day he's going to be picking up the keys for his new construction home, which would be awesome.
Seems like it's going to balance out well. We're
Yeah.
going to be able to stay into the house after the closing for a short period of time. We're
Beautiful.
working out a deal with the buyer there, so it's working out perfect for us, really. But,
Does your new place have a garage?
Yes.
You excited about that?
Yes.
Yeah.
That
Two-
was one of the
two
biggest
car
things. It's a
garage.
Two-car
Two-car
garage. We're
garage.
actually going to be able to get a car in there.
A car, he said.
Yeah.
He's already got plans for the other
yeah.
side.
Yeah.
The-
Well, the reality is, 2-car garage, you get one in there.
Yeah.
3-car garage, might get 2, or you get a car and a golf cart.
Oh,
the
golf cart.
he has the great open floor plan, which is so different than the house he has now.
Oh, yeah.
It's going to be so cool.
Plus the ceilings.
Yeah.
Yeah.
Yep.
So, vaulted ceilings.
They have the vaulted ceilings.
It's
so.
amazing how much
It
I mean,
does-
even though it's not usable room, how much it just gives that impression of how bigger it is, how much bigger it is.
Have you thought about the size of a Christmas tree you're going to be putting up?
Yes.
Or holiday tree?
Yes.
Sorry.
Yes. We're
gonna be a
going
tall
to
one?
30-footer. Yeah.
Nice.
Clark Griswold. We're going up to the mountains of Montana.
That tree in his backyard now, taking it with us.
Yeah.
We got plans for that bad boy.
Damn right.
A
I
little sap.
present the long Christmas tree. So, there's a lot of sap here.
Little sap.
A lot of sap.
What is that noise? Do you hear that?
You hear that?
Do you
It's
hear
a
that?
funny squeaky noise. Oh, don't get me started on that movie.
Here we go.
Oh, it's coming
I
up.
want you to say Grace. Grace
Stop
died 30
blessing.
years ago.
Well, that's an awesome shout out.
Yes, yeah.
Yeah.
And thank you, Jim. And thank you, Mike.
Yeah.
Yeah.
For all
course,
the help
man.
that you've given us too.
and Ross,
Johnny,
because
and
Ross has
yeah.
been
Yeah.
it's taken a team.
Well,
it takes a village, right? It takes a village
yeah.
to close the deal.
We keep going back to the simple fact of knowing your numbers, right? That's something that keeps being said over and over again. And the reason why it keeps being said over and over again is because you need to know your numbers. Mike gave me that ability to do that. Knowing what taking the taxes forward. I'm sorry. What's the word for that? again?
Proration? Oh no.
Property taxes.
With your portability?
The portability,
Yeah, yeah,
right?
yeah, sure.
Knowing the portability, teaching us about that. Because again, that's a massive, if we didn't have that, we wouldn't have been able to do this. If we didn't have portability and knowing what that number is, we wouldn't have been able to do this. It was a major factor. Again, homeowners insurance, and that was part of the tipping scale as far as going new construction versus a pre-owned home. So, knowing those numbers, that's why you need this team to be able to do that, because you don't just get Jim, you get Mike, you get Ross, you get all of the
You can get Johnny too.
and Johnny,
yeah. If you can afford them.
Paul Krasker. I mean, you got all the tools there in one spot.
Yeah, it's awesome. By the way, shout out
FloridaTalkRealEstate.com.
to Paul Krasker. It's his birthday today. So
Oh, is
happy
it?
birthday, Paul.
Did you know
All
that?
right.
I'll never forget it.
You guys should now be double dating tonight, probably.
Probably should, huh?
Yeah.
Yeah.
It's his birthday, your anniversary.
I'll never forget that. Happy birthday.
I'm gonna
Mr.
look
Krasker.
up what else happened.
And
on
you know
today.
what happened 31 years ago, 2 days ago, and I didn't see anything in the news. I was really
31
surprised.
Days ago,
So
2
August
days
24th, 1992.
92.
Hurricane, Hurricane Andrew.
Oh, that's right. I saw that in the
Hurricane
August,
Andrew.
was it? August.
August 24th, 1992. I lost a friend that day, not in the hurricane, but they were actually in the hospital, and The doctor said that the person probably died because of the altitude, the barometer drops and the air pressure.
Really?
Yeah.
Jeez.
And they said that they were very, very sick and they were on oxygen and everything. And
Okay.
they said that the weird weather from the hurricane, because people forget that Andrew was supposed to hit West Palm.
Right.
And then it moved to the south very quickly to Homestead. But anyway, isn't that weird that that was the 31st anniversary?
And you're right. I didn't see a ton of like remembrance and coverage about that.
It's weird.
Yeah.
And before Katrina, Andrew was it. Andrew was the big one.
Yep.
Sure.
Yeah. Now we've had Katrina, Camilla. I think Camilla was pretty big too.
I feel like everyone now.
Yeah, I just feel like they just get
there's
bigger.
a new one. There's a new record.
Yeah.
You want one more this day in history?
Yeah, sure.
August 26th today, 1939, Johnny. What happened?
Wait, how come I don't remember this? This should be indelible on the hippocampus.
And it's in sports.
In sports,
Oh, I would never know.
6. You said
39.
39.
39.
Oh, wow.
1939.
I'm more of a historian, a little earlier 30s.
Oh, it is the first televised Major League Baseball game.
Televised.
First televised Major League
I
Baseball.
wonder
game.
how many sets were tuned into that. 39.
3.
I bet I should look and see who played, but if it was one of the big teams, probably a lot.
One of the big teams.
Right?
There's like 4 teams. They were all big teams.
The Yankee Sox.
Interesting.
No.
You know what? That's I'm not going to remember that one. I will remember Paul Crasher's birthday, though.
It was the Cincinnati Reds versus the Brooklyn Dodgers.
They were the Cincinnati Reds then, too.
Yeah, sure.
Stop. No way.
I don't know. They'd probably go back, the Reds. I don't know the history of the Reds.
For sure, but not in Cincinnati. The Reds were somewhere else before Cincinnati.
I don't know.
If you look up Reds history, I promise. Here's a little fun fact for you. See if you remember this. I'm going to quiz you next year, okay? Our anniversary, 8/26. This was not planned. Just going to share this with you because why not? My birthday is February 20th. My wife's birthday is June 6th. 2 plus 6.
Yeah.
Not planned. As it just kind of came together, I was like, if you had your birthday and my birthday, it's our wedding anniversary.
That's right.
How about that?
Yeah. It kind of reminds me of those things that I would see on Facebook. Like, if you take your current year minus your birth year, magically this year, it's your age.
You might
right?
be an idiot.
It's your age.
Yeah.
Right?
You know what? Here's a fun one, too. I'm not going to quiz you on this, but you can use this like whenever you want. The last day of the year this year is going to be 1, 2, 3.
Oh, I saw that.
3.
That's right. I saw that.
1, 2, 3. 1, 2, 3.
Yeah. 12, 31, 23.
Got it.
But if you put in 2023,
yeah, I was going to say,
I'm
I'm thinking 2023.
Who writes 2023?
you can change it any way you want to make
Who
it
writes
whatever you want.
2023? You write 12, 31, 23.
So, I know that we're kind of joking
1,
around,
2,
but
3,
the
1,
stuff I
2.
want to talk about right now is not always fun stuff, but
Let's keep talking
important
random
stuff.
facts.
I know.
Come on, random facts. What do you got?
So-
Actually, this goes into the theme for the show today because you're going back in history too.
Yes. So we're going back to
How far you going
December.
back? Way back.
December 22nd, 2000 is where we're going back, all the way back to
The
there.
year 2000.
2000.
Wow.
Yes.
Year
2000. And that's the last time the interest rates were this high. And not really, because that was 7.17. There hasn't been a 7.23, which is where we are right now for Freddie Mac report. We haven't been at that level or higher since December 22nd, 2000. So we're at the highest interest rate for the last 21 years or whatever. So not great. But here's the other thing I checked out. When you look at the Freddie Mac chart,
No, it's
now,
not great because it's not working. That's
well-
why it's not great.
well,
Like,
this
when is this going to start?
This is the highest increase and the fastest spike and the highest increase of interest rates since 1977 and 1980. 1980 and 1977, they had a higher, faster spike of interest rates, but you have to go back 40 years to see what we're experiencing right now on interest rates, and nobody's talking about that. Everybody's talking about that the rates are getting higher and higher, where the last time we were. but nobody's talking about how fast it is. Mike, if you take a look at the 30-year
Yeah,
Freddie Mac chart,
I'm looking at it.
yeah, do you see it's almost a vertical spike in interest rates for us?
Yeah, and you see like short bursts of that.
But not as long or as high.
Yeah, not as long, not as high.
But if you scale it back all the way to 1970, you'll
Sure.
catch the two big spikes. So
Yeah,
only two times in the last.
Give me some numbers though on these spikes though. Where did we start before your spikes?
Okay.
Time?
So
we had a
you really want to go back to the 70s?
Yeah,
we had a long way to go from zero.
Well, let's go ahead and do it. So
right, I mean,
so
remember we were in QE. I mean, we should have been coming out of we should have been raising rates for a long time now, but now they're in this like reactionary raising where we have to get up pretty quick.
Well, here's what happened. In October 1977, we were at 8.93%. 7.23 doesn't sound too bad, huh?
No, it doesn't.
Right. So in 1977, we were 8.93%. Before we had a real drop, we were at in 1980. So I know this took 3 years, but from 1980, we were at 16.35. So if we do it a little better, we can say that in November 1979, we were at 12.8%, November 79. And then 6 months later, we were at 6 months later, no, I'm sorry. Yeah, 6 months later, we're at 16%. So we went up 4 points in 6 months. 4 points in 6 months.
Very different.
Then we had another.
Wow.
Then we had another spike.
Very different.
Wow.
16%.
Very different world.
Then it dropped. Then it dropped down to 12% very fast. Okay, and then in July, in 2 months, it dropped. In 2 months, it dropped 4 points. Dropped 4%.
Yeah. So from September 81 to February of 83. So about what, a year and a half.
Well,
now what happened from 81 to 83? Was that Reagan's first run?
There was one. Let me just get to July of
Reagan
1980. We were at 12%. July 1980, we were at 12%, and then by October of 81, we were at 18%. So we went up 6 points from July through October. Right? Think about that. So now what we're doing is we were in November.
Comparatively, it just doesn't feel anywhere near like those tragic times.
Well, no, because remember, like housing prices back then were going to be much, much lower than they are now.
Sure.
I look at this chart, Jim, and I see like if you take and you draw a horizontal line from 2005, 2007 era to where we are now, we had this big like economic disaster that caused rates, basically said we're going to lower the rates because people are hurting
to nothing. Yeah.
But if you kind of take out that, 15-year gap or
anomaly,
whatever, we're kind of it's almost been flat since then.
We're actually a little below average over that 50 years. You're right, Mike. We're even actually a little below over that 50 years.
To where we should have been. Had we not had a big old collapse, like if we didn't get tipped on our heads.
I don't know if sevens are there. I think the sixes is where we should be, to be honest with you, in the sixes.
But we're
not like crazy off.
We're trying to fight recession. I mean,
yeah.
Let's be honest. They're trying to slow down the housing market. It's working, but
here's talking about the buyers and the buyers market and how this is all affecting, right? So the economists are saying that they don't expect to see much price drops, even though that we're at these higher interest rates. They're expecting now. Remember back at the beginning of last year or the end of last year, the economists were saying that we were going to end in the low to mid fives by the end of this year. They were like 5.5 is what they were thinking. I'm like, you're on crack.
Crazy.
I had people I respect at the corporate office in the pricing side of things tell me things like that.
And I was saying no way, because I looked at 2018 and used the tracking from 2018 and then extrapolated it now, and it said this is what's going to happen. And I've been correct on that point. I didn't think we'd get this high. I thought we would be for sure in the sixes, for sure. And I think I even said sevens might not be unthinkable, but I didn't really think it would happen, but it wasn't out of play. And now the economists are saying, those same economists from last year that were saying we'd be at 5.5 right now, 7.23. Okay. Now they're saying we're going to remain for a very long time between 6 and 7. That's where we're going to
Why
flatten
would we
out.
trust them now?
That's what I'm saying.
Those same
Nobody really
economists.
knows.
Yeah.
So does that mean we're going to be at 8 or 9?
There is one thing that can happen where it would absolutely reverse. I mean, absolutely. It's just not going to happen. People got to stop spending money.
Well, it might.
If that happens,
well, it might be happening now. So let's get into that real quick. I just read a report.
They might not have any choice but to.
They
might run out of room.
Well, I just read a report that last month, Macy's, Nordstrom, Kohl's, Walmart all reported that they had more declines on the credit cards at the checkout. There's a spike of decline. So people are going to the checkout, taking out their card, and the cards are being declined.
Well, remember,
we're starting to see a spike in that.
A few weeks ago, credit card debt surpassed student loan debt. So like now we're going to start seeing you start hitting max limits, right? Because you're not going to, it was just a couple years ago, you could get a little like, here's a little extra limit for you. Yeah, you pay your bills. Here's a little extra limit for you. Those don't happen anymore. I will tell you this though. I had a stop, like my faucet stopped because I get all these credit cards. If you're a homeowner, you pay your bills, you'll get all kinds of credit card offers, right? And from companies, you're like, look at that, American Express also. It stopped. It just like a faucet stopped. It's cranking back up though, which always worries me when those are popping back into my mailbox.
At super high interest rates.
Super high interest rates, but people are going to be like, man, I need that, right? Here it comes. So, but it's tying into what you're saying. They're starting to get declined.
And
because
so we're seeing an increase in declining. So now it was just last month. 1 month does not make a trend, but that might be the tip of the trend, the beginning of the trend.
Well, the trend was when we surpassed student loan debt with credit card debt. Like
just hold on to student loan. Let's just put that aside for a second because that's a pretty big thing I want to talk about too. But the other thing related to credit card was that we have maxed out, or we're at a higher credit card balance than we've been in a very long time. I think we surpassed $1 trillion or something like that.
And people are starting to sap their 401ks.
Yeah. So it'll be, but the employment's still strong. You know, so, but we're starting to see what they're saying now is that the story I read, I don't know if it was Forbes or Business Insider, but what they were, or it could have been Wall Street Journal. But what they said is what they're finding in the spending habits of consumers now, that they're looking for price. They're looking for price, like low prices. They're not looking for
they want made in China.
Yeah, they want lower prices.
Damn you, China.
They want quality. They're looking for the best quality for the lowest price, and they're not buying luxury anymore. That there's more scaled back to be a little more frugal in what they're buying, but they're not slowing down their buying. They're just buying non-luxury things is what they're focusing on, which they're saying is a typical sign of what consumers do when they start scaling back. And that's the first step of the scale back. When things get tight. Yeah, and then it's going to get tighter and tighter, so other things will change. Now, getting to the student loan, Johnny, which is really important. I thought this is really interesting. You know what we're going to find out? Remember when we were talking about 2018, 2017, maybe even 2016, that the student loan debt was the biggest drag on the economy? Remember the good old days when that was our biggest drag on the economy before COVID and all that? Yeah. Well, now we're going to find out how big of a, before it was like an estimate or guesstimate of how much the drag would be on the economy from the student loan debt. Now we're going to know, because we got 44 million people that haven't been paying student loan debt for a very long time, for 3 years. And now I think it's October, they got to start paying. And now we're going to find out the effects of how many people are going to start paying, which I think is going to be surprisingly low compared to the amount.
Very small.
And number two is the ones that do, that's going to really probably screw up their personal economy, economics. And that's going to spill into other, other economic markets, such as car buying and groceries and houses and everything else.
Student loan, because they haven't been paying it, I think that's going to be absolutely the last thing that gets paid. If you're already financially constrained and you're not paying that, it just turns on and you're like, oh, well, let's squeeze that in. No,
it's, I think, very easy to get into head in the sand territory, because not only has it been deferred, it's not a bill that you plan for in your budget because you haven't had to. But you also hear talk like the government's going to do something about it at some point.
Sure,
and so you're like, why mess with it when they're just gonna, they're gonna defer it, they're gonna forgive it. Who knows? And I mean, that's right. There's talk. Is there any reality to that?
Well, let's take a break because we missed the 9:30 break. Let's take a break right now. On the flip side, we're going to talk very quickly about there is a program out there that's been out there forever. And the stuff I'm reading in the paper that's been denied, I'm like, they already have it.
Yep.
They already have it. So we're going to talk about student loan debt. Janet might need student loan help. So this will be a good example of how, fixing your student loan can help in your purchasing of the house. Okay, we'll talk about it on the flip side.
And lots of details on how this can change your world. If you're looking to buy a home, sometimes, boom, this student loan debt, you're going to be back in there and throwing a wrench in your plans. We might be able to make things better for you. This team is amazing. Florida Talk Real Estate is a team of pros. And it's a .com, your one-stop real estate shop, floridatalkrealestate.com. Write it down. Know it, use it, love it, share it, because you may be helping people out. You don't even realize it by sharing floridatalkrealestate.com. 4 minutes from now, we're back at it. Thanks for being with us every Saturday. Florida Talk Real Estate right here. It's Real Radio.
We're everywhere you need to be. Find your favorite show at realradio921.com. From the Gordon and Partners Weather Center. Have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
I'm meteorologist Jennifer Collins with CBS 12 News. A coastal shower chance through this morning, then mostly sunny, hot and humid this afternoon with highs near 90 degrees. Warm and muggy again tonight with coastal showers once again Sunday morning. Storm activity will move inland for the second half of the day with highs in the low 90s.
This report is sponsored by Irish Spring, the fresh scent of Irish Spring. And those sensational Irish Spring suds are just the reset you need to own the day. Irish Spring. When the spring hits you, you're ready. Pick up Irish Spring at your local retailer today.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Camaronets, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
From the Anajar and Levine Accident Attorneys Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
That's 1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Listen on your free iHeartRadio app for all your music, radio, and podcasts. Free never sounded so good. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
I'll say it again, 877-927-6969. That's a toll-free number if you'd like to be a part of the program on a Saturday. We got another hour for you before we pass the baton to the locker room. Johnny C., that's me. Our producer extraordinaire is Jimothy. How are you, my brother?
Doing mighty fine. Hello and good morning, gentlemen.
He's going to hang out and do a locker room with Greek and Joe. Is that happening? That's going on?
Damn right, yeah. College football starting this weekend.
Sure is.
Yeah.
How about that?
Mm-hmm.
You ready for New Year's? Because it's coming.
Yeah, pretty much, right?
Yeah.
So we got football season, then we're going to have Christmas.
You start football season,
Yeah.
it's Christmas, and then it's New Year's.
Yeah,
That's
exactly.
right.
Exactly. Yep. And
But a
Super
big-
Bowl, and then time stops.
Yeah, exactly. Yes, 877-927-6969. Toll free if you'd like to be a part of the program. Hello and good morning to the mortgage guy from the mortgage firm, my friend Mike Rauch. How are you, Mike?
I am doing great.
Good.
Yeah. That first hour flew by. Holy cow. I looked down. It was already 10 o'clock.
Yeah, we didn't break. When we plow through, it can go by quick.
One of us just keeps on talking.
Seriously.
Oh, I'm sorry. I apologize.
Damn it, Jimothy.
I'll curtail that.
Always great to have our fearless leader. I don't know, maybe like 2 or 3, 4 times maybe. I'm trying to think how many times we've made live radio on a Saturday without
Jim
DePola.
I can remember one,
maybe
two,
3.
maybe. Yeah, maybe 2.
Gosh, not many. He is here
The
with
fearless,
us. The fearless leader. Yeah, it's for 11
Except
plus
for
years
heights.
now. Oh, he does have fear.
Yeah,
Spiders
and water.
You all right with spiders?
Yeah, in the dark, he doesn't like the dark.
What else are you afraid of?
Keller Williams Innovations. You'll find the Florida Home Roasting. He's got a ton of fears, actually.
Oh, yeah.
There's Jim DePola.
He's got
Jimmy D.
shy bladder.
Oh.
Oh, what are you scared of? Nothing. Pool's just cold.
Well,
Shrinkage.
happy South Florida, everybody.
What's up, dude?
At least it isn't raining outside, right?
Oh, good.
Yeah,
Stop.
'cause
Yeah.
Stick around.
It rained the whole way down here.
Oh my God, this past week was like amazing with could feel a little bit of change, right? Like cooling off just a smidge.
Yep.
We've had those weird like late thunderstorms, so like nighttime ones, which have kind of been crazy, but I've been enjoying it.
Good ones. So I know, people working outside, you're like, yeah, Mike,
Yeah,
definitely
right.
cooling off.
When you step outside for 30 seconds.
Right. Yeah. No, you feel it though. You know what I'm talking about. It still sucks out there, but there's been that nice like breeze. It feels like we're turning to fall, although I know it's not happening.
Oh, it's not fall.
I know it's
not
not
yet.
happening.
But you can sit outside
And
towards
enjoy
the
it
end
for
of
a
the day and be
minute.
like, oh, a little
Yeah,
breeze comes
exactly.
through and it feels good to be out here. I'm not sweating at 8:00 at night.
So I do a lot of honeydews when I get home, like 5:30, right?
Yeah.
And sometimes it involves being outside. And last night was the first time I'm out there for a couple hours and not just going,
Miserable.
oh,
Yeah.
Yeah.
Nice.
Yeah.
I
Blow
love
dry.
that your honey puts you on the honey-do list.
oh,
Like
I think
daily.
oh,
You're like,
oh,
wait
yeah.
a second, not the weekends. I got it like during the week too.
hell yeah.
Jeez.
What do I want to do it on my day off?
Oh, this is strategy.
It's strategizing.
Oh, look at
Yes,
that.
sir.
Knock out one every day, and then the weekend you just don't have you do what you want to.
Do me. That's right.
Nice.
Yeah.
What are you guys planning? Any big thing for tonight? Going to dinner? You cooking at home?
So I'm not exactly sure how tonight's going to come together, but you may or may not know we're big concert goers.
Yeah.
So we plan like our happy birthday, happy Mother's Day, happy Father's Day, happy anniversary,
Go
Merry
to a
Christmas, Kwanzaa. We buy our concert tickets.
Boom.
So we have like it's 1 or 2 shows a week through October. It started weeks ago. We're in the pit for that, in the pit for that. We got Freaks on Parade Sunday. That's
Okay.
Rob Zombie's every summer tour. Started the other night. It's coming through West Palm this year. Last year we had to go to Tampa for it. He's in Tampa tonight.
Yeah.
But fortunately coming to West Palm this year. We had to go to Tampa last year. One of the Saturdays I missed, I'm sure.
I remember that. Yeah, I remember.
We were in the pit for Rob Zombie and Mudvayne and
I remember
Power
you talking
Man,
about
Static
that.
X.
Yeah.
This year it's Zombie, Alice Cooper, who's been doing it for 50 years, by the way.
So crazy.
Dude's
Still
like
rocking.
he's in his 70s. He's going to sound amazing.
Literally,
think
he's
he's
in a
75.
rocking chair
Yeah.
on stage.
We
He's
saw him
rocking.
we saw him in Rockville in May. He's fantastic. Ministry and Filter, and my little girl's going to be there with us too. It's her first zombie show.
Oh, she's gonna enjoy that so much.
She loves Rob Zombie. Yeah, she's so excited. So that's kind of how it comes together Sunday night. Tonight, I'm not sure, Mike. Long answer is I'm not sure.
Is she still drawing?
Yeah, oh yeah.
She still draws.
You
So
know,
that wasn't like a little kid thing. She likes it.
but she likes to draw
Yeah,
horror
cool.
characters.
Yeah, I know.
The latest one she did was a really cool, like a shaded pencil drawing of what do they call the guy from the movie Scream? What do they call that character?
I don't know. I know the melted
Screamo?
face guy.
Yeah,
The melted face mask guy,
the
right?
mask guy.
Yeah.
The ghost guy.
Yeah.
Yeah.
That's
Shit.
pretty cool. So she's doing that now.
Yeah.
It's very detailed too. It isn't just like little kid spooky drawings.
No, she's a freak.
It's pretty
like
cool.
that. Yeah.
Ghostface.
Ghostface.
So-
Thank you.
So I wanted to get into the interest rates again a little bit, just to talk about how the Fed, because one of the things that's bothering me right now, you know how we lost those 4 banks a few months ago that were the techie banks? I can't remember the name of them, but
Yeah, the California,
tech
I
banks,
forget
right?
the name too.
So
you
I
think it'd
can't-
still be top of mind, but
yeah,
we're not
it's
in
like right
California.
there.
First time I ever heard of them was when they collapsed. So
Yeah, and they were
Silicon
big.
Valley Bank.
They were relatively big. They were regional, but they were still big. Like if you looked at the list of the top banks, they were in there, right? But
they had
they
a lot
said,
of
don't
capital.
worry, it's just contained to this type of bank, and it's because of the type of clientele they had and everything. But the concept that I understood, and it's maybe above my pay grade, but was that they had so much money coming in from these companies that were putting their money into the bank, that the banks took the money and put it into long-term
treasuries,
treasuries, and then they couldn't get them out when they needed it when the economy started turning for them, for the banks. And then they didn't have the money and they weren't liquid. They had the money, but they weren't liquid, and then it became a problem. Well, I read weeks later that one of the reasons why that all happened was because the way that happened is because they weren't expecting the feds to jack up the rates and keep them there as long as they did. Well, now we're at higher, we're even higher than we were then. And then the Fed came out, the meetings of the minute or something came out last week, and it created a stock market
Just a couple
drop
days ago.
and then
Kerfuffle.
increase.
Just a couple days ago.
And it's because something that was in either Jerome Powell said or one of the Fed people said, saying that we're anticipating we are going to continue the rate increases.
Right, which was different than when the last rate increase came out, 2 weeks ago. There was a lot of talk about, okay, they're probably slowing down. They're indicating like that this is going to stop. So maybe we get a little bit of relief the rest of the year. And I think everyone in this room was thinking, I don't think so. I don't see any, like maybe another couple hikes through the rest of the year. But it's to be optimistic. You're like, okay, maybe now finally they're taking the foot off the gas of the inflation fight. And then
that report that
they flat out said it though in that quote. I'm with you. You're right there, but you got to finish it. And they said unless people stop spending,
right?
Like flat, they weren't even shy about it.
Exactly.
Stop spending. We'll stop raising rates.
So what happened? Then what happened was the stock market had a pretty big dip because the Wall Streeters were like, wait a second, we might be going through more rate increases.
Exactly.
We were hoping for something different.
Right.
But then the next day or a day later, it kind of came back again. We got what we lost and kind of went back to even, because half the people interpreted what that sentence was one way, meaning that we're definitely raising interest rates more. And the other ones read it as, well, we're ready to do that if we have to. We'd prefer not to,
Right.
but we're ready to do it. If you guys don't
Sure.
start slowing down,
That's the way
we're
I
going to
took
do
it. I
it.
took it like, don't make us.
Yeah, don't make
Yeah,
us, right?
yeah.
You know, we're giving you a big hint here,
Right.
people, right? So I just found that to be interesting. And then you have the economists saying we're probably going to be staying at the 6 to 7% for a very, very long time in the mortgage rates, right?
I think if it goes down, I think we're probably not in great shape, right? This is where we should be. Ish.
I don't know, because I
Ballpark.
still feel like there's an affordability crisis. Right. So I had a real estate buddy texted when we were talking rates earlier, Jim, and he said with rates high and prices high, eventually one of those has to give. And the problem I see with that philosophy is if the rates give, the prices aren't going to give, right? The prices are going to hold, or the prices maybe even go up, right? And so I don't know. You need both of those to go down to kind of get into this affordability crisis mode. And I also think like stop spending is a message, but I think there's a lot of families out there who have already cut out discretionary spending and they're already tight. And so it's like, hey, we're doing our part. When's everyone else gonna, like, how come everyone else isn't feeling the crunch? And they're not, because of the things you talked about, right? Like they're basically borrowing to keep up the spending. And some of them are borrowing to, buy food.
Here's the theory I have.
Yes.
Everybody's waiting for the shoe to drop. I shouldn't say everybody, but there's a lot of people out there that just don't feel, and for a long time they haven't felt, that the economy's just right. They just feel uneasy about it, even though we have had high inflation. It's come down a lot. I still don't think we're out of the woods on it yet, but it has come down a lot. But no matter through this whole thing, everybody's so nervous that everything's going to crash. And we had that a little bit in 03, 05, before we had the crash. There were people like that. But this is what
the bubble burst.
Yeah.
People, but there's a lot of people who say, I don't see this bubble bursting.
Well, we have super strong employment. For the first time, salaries are above the inflation rate. The salaries are growing faster than the inflation rate, which I know is not a good thing.
So I would, as you said that, like, I'm going to follow up with, but nobody's getting paid what they need to be getting paid. And every time they throw those like salary versus inflation rate numbers out, I go, ugh.
Yeah, but it's a benchmark to work off of to see where we're headed, which way we're headed. But this is where I think,
because you've heard that narrative for
but we
a while
don't have
now.
any. What I'm saying is we don't have any signs for a real estate crash. Everybody's making their payments. We talk about over and over again. There's less than 24
rates.
foreclosures and short sales out of 6,000 homes on the market, right? So everybody's making their payment. We're not really seeing a spike in foreclosure rates. Remember a few months ago, those little reports were coming out that we were seeing a spike, but the numbers were so small. The percentage of the spike seemed big, but the numbers of actual people foreclosing were so small. So all that's kind of flotsam jetsam of people just doing it. But here's where I think the crash could happen. What happens if the feds continue to raise the rates and keep them at high rates, and the traditional banks get squeezed the same way about the long-term non-liquid holdings they have, that they can't access it if they need to? Because that Jamie Dimon guy from Citibank or whatever, who's always a doom and gloomer, it seems like, he's saying that the bigger banks can get squeezed the way that the tech banks got squeezed out because of these high interest rates the Fed are doing. And I don't know enough about that, but if that's true, and the banks fail the way that they failed, then we got a real problem.
Well, but if that, so what he's saying is that it's built on a house of cards that isn't stable to begin with.
That's what I think. I feel
that's
like
what he's telling you. If that's a reality, like this is like, we're not even really propped up well to begin with. So if it costs us more to access dollars to give you dollars, we're not going to be able to do it. That's not a good sign to begin with.
Yeah. So what they're recommending is you can't keep jacking up the rates, and you got to bring them back down again as quickly as you can. And maybe that's
this
why
is
Wall
the guy
Street
standing on top of the house of the cards.
Yes.
Yeah,
basically,
like
right?
Yes.
But the thing is that the thing is that maybe is why all these Wall Streeters all the time are always expecting that, we got up to that 5.25% for the Fed rate, that they expected it. Remember, they've been saying since last year, by the summer or the fall, we're going to start seeing the Fed drop the rate. And they were always so hyper that the Fed was going to drop the rate. And I'm thinking, we were already artificially low for so long that we're only getting back to normal. Like, Johnny, you've been saying this. We're just getting back to normal. And then you want us to go below normal again.
Yeah, for no reason.
So now maybe that's why they're saying that, because maybe they know that these these big box banks can't handle the way
high borrow, because they have to. Like, I think the thing is, like, if you took your liquid assets and put it into long-term holdings that you can't really liquidate for profit, and you have to borrow money to fund your banking operations, and what you're borrowing at is higher than the yields on your investments. I think that's where they get into problems, right? They just couldn't meet the demand required, and they were going to take a loss in order to meet that demand. And that's essentially what they did. They said, listen, we're taking this loss because we gotta, keep our depository accounts.
And then what happens? They made the announcement they were going to do, and then everybody started pulling out their money.
Right. And they're like, wait, we followed a similar strategy. What are we going to do now? A lot of small, credit unions, things like that. We're kind of in that spot. You said,
but they always do it with the idea of I have a net of a bailout, right? There's never this like, we can't do this because of, right? It's always like, well, maybe because we have this to fall back on.
Or it's like, this is our strategy because things are going good, right? Like, this is our strategy and we projected that things will be fine. And then all of a sudden you get this spike, like the spike we're seeing in the mortgage rates. You can just put the Fed, chart right behind it and you see what's happening. So nobody's anticipating the spike, or if they not as much, right?
And
not as much pressure.
And I kind of prove that in a way by going back and looking at that chart to see the biggest spikes. You know what I mean? So we really are in territory that we haven't seen in 40 years.
Yeah.
Right. 40, 50 years.
But that doesn't mean we're not where we should be.
Right? Exactly.
Right.
Exactly.
Well, I guess it could have been anticipated in a way, right? As things were getting healthier, you're like, well, if we're ever going to move our rates back up.
Well, people were calling it the new normal. Remember, we were questioning, maybe this is the new normal. Maybe these super low interest rates are just the new normal because they were so long. We had them for 5 years, right? We had that about 5 years, right?
You certainly get
in
used
the
to
threes.
it. And if you're in the trenches, you get used to it. And this increase that we've had, I'm still talking about what rates were. Right. And eventually you can't have that conversation more because they're just not there, and they're not going to be there for a long time.
And I remember back in the day where I said we never see under a 5 again, whenever we hit 5, it's like we never. And then, of course,
floor.
we did. Right.
Yeah.
And I called that the new floor, and it wasn't. It went down. Yep. But maybe we are getting back to a normal floor. And just to remind everybody, we're at 7.23 over the last 40 years. Remember, the new report came out. The average interest rate over the last 40 years is 7.75. So we're even a half a point below the statistical norm over 40 years.
We can still go up.
Oh, yeah.
Yes, we can.
Yeah, unfortunately.
Yeah,
so,
I think now the optimistic is like the Fed's just going to hold. All right, let's just hold where we're at. Let's let this thing stabilize. But if people are predicting the Fed coming back down, I don't know what's going to precipitate that other than other financial crises where they're like, okay, now we got to use this lever to help, raise the water for all ships type of thing.
Because the tide raises all ships, right?
Yeah,
so
exactly.
Let's talk. We talked a little bit in the first segment about sellers and the pain that they're going through, right? They've got to worry about homeowners insurance, and property taxes are going up even in this tough time because values have held tight because of the low inventory, right? They have to worry about all that stuff. They sometimes feel like they have equity in their house, but they're trapped and they can't get it without a lot of cost to them in the future. So that's what the seller's pain is going through,
you
right?
mean the owners or sellers?
Yeah, I call them sellers. I'm sorry, but homeowners. Yeah,
every owner's
eventually
a seller.
every homeowner's a seller in my mind. Yeah,
Right.
They're gonna sell sometime.
Right.
At some point, that house is gonna be sold.
You should get them into one of those 30-year contracts, right?
Yeah, like
hey,
that company.
Right. Yeah.
Hey, I'd love to sell your house. I'm going to give you $5,000 now, and I don't care if you sell your house for 20 years from now. You're going to sell it with me.
It's
funny.
like those old contracts in the music industry, right? Like
Mhm.
the lifetime contract or whatever.
Yeah, for a
Okay.
nickel.
So owners are
So-
feeling the crunch.
Yeah, so the buyers, I sat down with one of our customers that just signed up, Janet, yesterday, and every time I talked about something, she was like, "Oh, geez," and she was so right about it, and it was so sad to talk to her. I felt like I was in a yesterday. I felt like talking to buyers today is like talking to short sailors back during the crash. That's what I got. That's how I exactly felt.
Right.
Huh.
Because short sellers were not happy people, right? Their house was super, super upside down. They usually didn't want to leave the house, but it was so upside down they couldn't afford it financially. They couldn't work with their bank to work out a different term. So they were forced to sell the house. So it's not a happy experience. Their only benefit they were getting was to walk away debt free if we were able to accomplish that for them, and maybe some money to move, right?
So wait a second. So your buyer consultation feels like somebody who's
Like
facing
that.
foreclosure.
Like, yeah,
and,
it does.
sure, maybe we need a new buyer's agent in there.
So yeah, but think about this. So I have to sit down and I have to explain stuff to them, right? So the first thing I explain is, and I did this with Jimmy, is I usually take out like my computer or something and I show my keyboard, right? And I say my keyboard is the community from 20 years ago that was a brand new community. And then I say like the A letter is a 3-bedroom, 2-bath, 1,600 square foot house. And on the same block, 5 doors down, is another 3-bedroom, 2-bath, 1,600 square foot house. Same community, same features. Amazingly, both these families picked out the same finishers. They have the same backyard. There's no difference in the lots. They both buy it. Now it's 20 years later. And lot A, they're paying $3,000 a year in taxes.
Yeah.
And lot D is paying, $7,000 a year taxes.
How
It's
about
like how
semicolon?
that
What's semicolon doing over there?
yeah, I don't know. Yeah, we'll have to figure it out. So that's a 4-bedroom.
Oh, shit.
That's a different zip code.
So
over there.
so
Homework
what?
quiz, baby.
So why would
ASDF,
that
kick
happen?
me out,
Same community, same house, same everything. One has 3,000, one has 7,000. I explained this to the homeowners or the buyers that the homeowner's tax bill is not going to be your tax bill, right? You have to explain that to them, but you
Property
also have to
taxes.
explain that you have to understand property taxes. And when you explain that the tax bill that the current owners have is not going to be your tax bill, and it's going to be probably significantly higher depending on how long they own the house, that's a hit against them. So they got to worry about that, right? Then they got to worry about homeowners insurance. Then I got to explain about useful life of roof. And that's how it's affected insurance, right? How it's affecting their purchase power, right? And talking about that, and then understanding to know your numbers the way Mike teaches you to know your numbers, which is not just, hey, I'm good for 500,000, but I'm good for 500,000 with a tax bill that's no more than $4,200 a year. And if I have an HOA, I can't pay more than $400 a month, right? So that's knowing your numbers, not just I'm good for 500. And you explain all this stuff, and they're like, geez. And then you start talking about the interest rates. Then I had to explain Hometown Heroes. Here's another announcement. What was it? Wednesday, Mike? Wednesday, Hometown Heroes is gone. See ya. Bye-bye. Over.
Well, no,
$100 million in 10
That's
weeks.
not fair.
Not gone. Just all the funds have been reserved.
For now,
Right.
it's gone.
just
We'll
has
tell
no
you when
money.
it's gone back.
Until they re-up it, which is probably next July.
If you're buying right now, it's gone. Bye-bye. That's all you care about. You don't care about next July.
That was quick.
So
Here's the
10
good
weeks,
news on
$100 million.
There are
I
still
like good
other
news.
down payment
Yes.
assistance options available. And I'm going to encourage you, Jim, as a listing agent. Okay. I want you to prepare your sellers to help the buyers with concessions.
Would you do it to buy down the rate, Mike?
That's one option, but probably for closing costs. So I'm basically saying, so if people were relying on DPA, and I think there were a lot of people who, like Hometown Heroes, got gobbled up very quickly because people jumped on it. They're like, wait a second, I can get some help with my cash. I can get a competitive rate. My closing costs are a little bit lower than they would be otherwise. Like, great, let's do it. And that the funds went very quickly. It opened up to all first-time home buyers.
Yep. And
so they went quickly, but there were a lot of people who needed those funds. Like that was the only thing that was stopping them. And it could be, $10, $12, $15,000. But you don't always need that. Like, it's nice if it's there. What if you just needed like 3,000-4,000 to
Mhm.
get you over the hump? And so traditionally, instead of DPA, you would say, well, how can we put this together? Let's get a seller credit, right? Like, let's agree to a price and ask for a seller credit to help with the cash.
DPA, that's
And
down payment assistance.
Yeah, down payment assistance. So I just think we might be moving into the world, Jim, where sellers need to be prepared for those types of offers and not be scared of them. And
Well,
it depends on how many offers you got on the table.
It is true, but like the last 4 houses we just talked about in the last segment or anything they put under contract, I had 6 days on market, 7 days on market, 4 days on market, and 36 days on market. So if you price it right, within prevailing values that are going on based on your condition and size, you still don't have a hard time selling the house. So the sellers don't really have
They
to
don't have
if
to.
you do it the right way.
Yeah.
Now, if you're do it the wrong way and you're weak and you put the house on the market way too much for what it's really worth, and then you go through that pain of waiting, then seller concessions might be
Yeah.
a good thing at that point, because you kind of tarnished your listing in a way.
I'm just doing my part. I'm lobbying listing agents, right? Like,
Yeah.
hey, help us out.
Yeah,
Help
well,
us out.
and
Right.
and there's times that are needed. So the thing is the buyers, you have to tell them that the Hometown Heroes is gone, but there is another down payment assistance program, but it
Sure.
has a higher interest rate than the Hometown
Well,
Heroes.
depends. We're still
So-
good FHA. So if you're an
Yeah.
FHA borrower and need
Yeah,
some
that's
help
true.
with DPA, there's still a great program available. If you're conventional, it's not. It's like the old, I don't really like DPA because the interest rate's higher and you have a penalty. So find the cash somewhere else.
Right.
Mhm.
Right.
If you can.
If you can.
If you can.
FloridaTalkRealEstate.com. If you're looking for answers, FloridaTalkRealEstate.com.
Yeah, so just be open-minded about what's going on out there, because if you're thinking it's going to get better for a buyer, there's really nothing on the horizon to show that it's going to get better, right? We don't know what's going to happen with interest rates. We might be in one of those 5-week cycles that we've been going through all last year, where we go up 5 weeks and then we
Sure.
go down for 3 or 4 weeks, and then we
Right.
go up for 3 weeks and we go down for 5. We might be in that
You kind of
cycle.
have the news cycle, wagging the dog type thing. And so we might get a little
Yeah.
slip. I think it's probably it would behoove us to go back to basics about, like, so it's very easy to say, oh, geez, well, things aren't great, so I'm not buying, I'm waiting, right? And we talk about that, like, what are you waiting for? But here, you have to be, if you're a buyer, meaning you could see yourself buying if the conditions were right, you have to be prepared when the conditions are right. So you got to know what numbers you can tolerate. You got to know what numbers you qualify for. So you have to know, like, what's a comfortable monthly payment that we know we can get into, and then what are the conditions under which we're going to land at that payment. And you have to know if you're going to have problems getting a loan otherwise, right? If your credit needs some work, student loan payments got you thinking, like, oh, geez, when am I going to be?
Right.
So, to me, it's never a bad time to explore what your options are. And then once you know your options, and then do I need to work on certain areas, or am I okay? I just need to wait for the conditions to be right. And so that doesn't cost you any money. It costs you time. It costs you a little bit of, exploring your financial situation, which a lot of people don't like to do, right? It doesn't feel super comfortable to lay everything out and really assess where you stand.
Well, and you should want, if you're going to make a decision,
Or be prepared to make a decision.
Yeah, you want to get as much information as you can to then make that decision, right? Or to at least wrap your head around what you're dealing with. When you're lacking that information,
sure,
you're making a decision based on just your opinion or your thoughts.
Right. It's
you're
like
really
how you
basing it
feel,
on
what your neighbors
feelings.
told you, or
right.
what your uncle, in the other
what you
state
read in the
told you.
newspaper.
Right. You're being led. Why don't
Yeah.
you get some information, make your own assessment, determine your own positioning in your life. Don't just let people tell you how things are going to be. Find out. And again, there is no obligation. There's no cost. But what you may be doing by not finding out is continuing this cycle of rent forever and never being able to put in a position, because you might be closer than you realize. I know this because I did this.
Yep,
I've been down this path.
And Janet, for example, she's probably going to get a 3-bedroom, 2-bath, single-family home in Port St. Lucie, and her based on the prices we looked at yesterday, she's going to pull about $12,000 out of her pocket to buy the house and get the keys to the house with the down payment assistance program Mike's going to put her in, right? Only $12,000 gets you the keys to a 3-bedroom, 2-bath, single-family home, right?
Sure.
That is a very, that gets you in the game.
At
So
a
na-
payment that she's comfortable with.
Right. And this isn't right. This is a price point that she's picking for herself so
Right.
that she knows she can afford it. We're not trying to upsell her. So $12,000 gets into her house that she could afford. For her, she's saving roughly $1,000 a month versus her rent payment. Very good value there. But more importantly, she's in the market, which means now as houses appreciate, now she's in that roller coaster ride up, right? And she's actually gets to benefit on that. When you're sitting on the sideline going, I'm going to wait, you don't get any of that benefit of all that stuff.
But most importantly, that instantly positioned way better. She's got her spot, right? Her monthly is in a way better position. And truly, we all want appreciation in our spot, but truly, even if things kind of get rough, she's in a better spot. And unless she's trying to sell that new condo or that new home or trying to refi it, kind of doesn't matter what happens to the marketplace.
As long as you can get into a comfortable monthly payment and there's no imperative to make a decision at some point, like a deadline, right?
Yep.
Like, oh, listen, Jim, if I ask you, I want to buy now and sell for profit in 3 years, right? Could you tell me that's okay, guaranteed you're going to be able to do that?
Way.
No way to tell you that. But I want to buy now. And then at some point in the future, Jim, we'll be able to sell this home for profit at some point in the future.
Of course.
Guaranteed. Yes. Right. Who knows? Is it 3 years? Is it 5 years? Is it 12 years? Is it 20 years? Who knows? Who knows? So that's what you have to be able to, you kind of have to, you don't know what you're waiting for. So all you can do is gather information. If you do something now, is it something you can tolerate from a budget perspective? And is there anything else you need to work on in the meantime? And then you can also pinpoint the conditions under which it will be right for you.
Yep.
And that could be as simple as I need a payment of this. I want to be in this neighborhood or this neighborhood. So I need my prices to come to this level in order to result in that payment. So I'm watching and waiting for prices to get to that point.
Jimmy had that exact scenario, and you built a house.
Yes.
It has to be
The house
this.
that Jimmy
I need
built.
it there. That's
Yes,
right.
exactly.
I can only spend this much, and I want it right here.
Because we knew our numbers.
You built it.
And
it can't be done.
And you didn't have to do that. It's just, guess what? He was a homeowner. The timing was right.
Yep.
And he's like, oh, look, these stars have aligned and now it makes sense. Let's do this.
That's
and
right.
if you didn't own the home, you might not be able to do that.
But
Right?
but-
Doesn't
no,
mean you
never.
couldn't buy the house you're buying,
No.
but maybe you wouldn't have had the favorable conditions under which. So you
Sure.
had to be a homeowner in order to make that happen.
So every situation's a snowflake,
Sure.
right? They're all unique to your scenario, but
Yeah.
you're probably paying rent, right?
You have a housing obligation.
You have an obligation.
Most
so
likely.
weigh them out.
Yeah.
Don't just assume. Get the numbers. Find out where you're at. Florida Talk Real Estate is a.com, your one-stop real estate shop. I know some people that can help you out tremendously. If you go to floridatalkrealestate.com, man, you can get some pros. These are experts in their field, and they will help you know your numbers and your positioning.
Yeah, you just said it, but as we're talking about this stuff, I guess one thing is talk to the professionals about it and talk to professionals who aren't, let's give people, maybe some people out there saying, I don't want to waste your time.
Oh, I hear
Right.
I don't.
Yeah, I don't want to
waste
you.
Jim's time. I don't want to waste my
Guess
time.
what? We don't mind.
Right.
We don't mind if
we
it's
gotta
not,
check
if
it out.
not now, if it's just 6 months or a year or 2 years. We're not in this short term. This is our career. We're going to be around. We're going to be doing this. We're going to be here for you. And we help you figure it out. And then the idea is at some point, of course, we want it to turn into to business. We want to help you buy that home or sell that home.
You guys don't want your time wasted either. The thing is you don't view this as a waste of time. This is the
interesting.
process of your day.
That is true.
This is how you build your relationships. You find out if people are positioned. This is how you cultivate their futures.
I was 2 years.
It's not a waste of time from your perspective. From their perspective, it might feel like they're wasting your time, but you shouldn't view it that way.
Yeah, and the thing is, sometimes people are embarrassed to get the no. Like they're so afraid of get the no that's a really big holdup. Is they don't like being rejected. And what you have to understand is when you come to us, there is no rejection.
Nope.
There's never really a no. It's just the worst it is. It's not right now.
Not right now.
Not right now. And all that means is, hey, let us help you find out how to get where you need to be.
Yep.
That's what happened when I bought my first home. I had people that helped me. Johnny went through the same thing. Jimmy's going through that now in a way. And you just have people help you go through the process. That's why it's so great with Mike, and having that mortgage app is really helpful. Like I'm teaching everybody. I showed David and Janet how to use that app. It's really helpful.
Yeah. And it's hopefully it's like that. It's not a lot of explanation needed. It's pretty self-explanatory, and you get in there. Maybe you have to say a couple key pointers like, hey, this is what you're doing. But that's helpful. I talk to people a lot who just maybe they have credit challenges. Sometimes those challenges are on like the negative side, like bad credit or poor credit. Sometimes it's no credit. But in either of those situations, establishing positive credit will put you on the path to increased credit scores. And it's so easy to establish positive credit,
right?
Hey,
and make it as positive as it can be. So even if you have some negative stuff to clean up or think about, you can also, I talk to people about report cards all the time. Like, Jim, you remember back when you were in school and they were like carving your grades on the tablet and everything, right? Like the hand chiseling your
yeah, with the little stone tablet.
Right. You might have you might have messed up your freshman year of high school, right? And you got like D's and F's because you just didn't care. You're not going to be able to always go back and talk to those teachers and correct your D's and F's. Let's say you can't, but you know what you can do is start adding some A's on the report card.
No,
so
you
GPA,
take the F and you turn it into a B.
That's right. You just
turn it into a B.
Sometimes you could do that. Sometimes you can.
You sure could.
Right?
Jimmy D.
But so even that type of conversation and consultation, just from somebody who knows what they're talking about, right? I'm not like a credit repair expert, but I do look at a lot of credit reports.
Yep.
And I do have concrete ideas on things you can do to make your positive credit as positive as it can be.
Proven. We've had people call up, Mike, say, do this, this, and this. They didn't go to a credit repair place, do any of that stuff. They just follow what Mike told them to do. Got on like a Credit Karma app or something to kind of follow it, just
Sure.
get an idea. It's not exact, but it gives you a flavor. And then a few months later, they're ready to go. And they didn't have to go through that whole credit repair process and all that. They just followed some of Mike's tips. Hey, pay down these credit cards down to this level. Make sure that you make your monthly payments this way, and that should get you pretty far along. And sometimes that's enough just to push you over the edge.
And sometimes, like, there's certain things that you do have control over, and there's certain, like, a lot of times you don't have control over your income. A lot of the time, say you're a W-2 employee, you just can't go ask your boss, hey, I got to buy a house next year, give me a 20 grand raise, right? Like, you can't do that.
Can you show 30,000 more for me?
Sometimes you can control your spending. Sometimes it just has to be stable, right? Like, you know what your budget is. You can definitely control credit, right? And so don't let that thing that is in your control be the thing that is stopping you when the time is right. So you just have to like, these are things that are important so that when the time is right, you're in position to do it.
Yep.
And we can talk about those things and put you on that path.
And that's it. And waiting for your arbitrary, like, time is right is just not the way to do it.
Sure.
The time is right when you're positioned and you're ready. So
you probably did that before like today's your anniversary, but before you got married, you probably had a lot of, it doesn't feel right. Not yet. Right. Like,
definitely.
Like I'm not
never going to happen. Yeah.
When are we getting married? Who? What?
Yeah.
Oh, married. Nope. Come on, girl.
I wasn't going to buy a home.
Yeah, you had the thing with the home.
Yeah, no, I was fortunate enough to be on this program and had people like Jim around me and was, kind of grabbed by the hand and like told like, no, you're going to buy a house.
And holy cow, you went through that experience of like, hey, wait, the credit I was just talking about.
Yeah.
You needed some work on your credit.
Lots.
And you implemented stuff.
Had to
and
happen.
So that it was there as an option when you were ready.
It was the only way it was going to happen was if that was the first thing that was the first domino was I had to position myself credit wise. But the path was laid out
and you had DPA.
I did get DPA. Yes. In a bunch of different ways. Yes. Yeah. But so it was, again, there was a village, there was a team, FloridaTalkRealEstate.com that made it a reality for me, but it took that, like, sit down. I'm never going to buy a home. Why would I ever even have the consult? Right. I went from that to sitting down going, oh, okay. So there is a path and I can keep throwing it here or I can do that. So clearly I was a very, very fortunate position, but you are too. Yes, you are too. Florida Talk Real Estate is a .com. You can have the same team I did.
And talking about getting into the game, in the time that you've owned that house, which is roughly 10, just a little less than 10 years, I've got 10 years now, the house is more than doubled. It even at the peak, it was even more than double.
So I've refied since,
right?
And
but
still am in a wonderful
you're in a good position.
Yeah.
But from the time you bought it to what it's worth now, you've definitely doubled.
Yes.
And at one point, you were significantly above double. Just the market's changed a little bit in your neighborhood.
It's settled in a little bit in my neighborhood, but
still,
like a year ago,
double in 10 years. That's 10% appreciation for a year. So you're sitting around renting. I don't want to do anything. It's a bad market, right? Well, what you're not getting is that while you're waiting for that better price and terms, you're not in the market, so you're not in the game at all. So you don't get any of that benefit of being in the market. That's why a lot of times, as long as you can afford it and you want to buy something, not just to do it, but if you have the need, don't talk yourself out of it. Sit down, have a consultation. Let's figure out what this will look like. Maybe it's not right now. If it's not right now, we'll be the first ones to tell you. No problem with that, because we want to build the relationship.
Well, I understand the numbers. I understand everything you read. None of it makes you go, oh, I should inquire. Like, it feels like a great time to buy. The best time to buy is when it's right for you and your family. And I know the numbers are scary, from the interest rates to the values of homes. And, oh, man, it's just everything's gotten worse. Yeah, it's true. But Jim just keeps hammering. If you're already paying rent and you're paying a lot for that rent, man, you could be a homeowner and in the game and building towards your future and in a position where you don't have to worry about rate increases. Yes, property insurance sucks in Florida.
It does.
We can't control that, but we got pros fighting for you too. FloridaTalkRealEstate.com. Just don't assume.
Yes.
Let's just fill in the gaps, please.
Now let's talk about the monthly stats. We have a little bit of time here. I had such little time this week. I was so busy this week that I really didn't look at the monthly stats. I copied them. So we're going to kind of get a feel. I just looked at.
You're saying this is your first look right now?
Basically right now. Palm Beach. I looked at Palm Beach, Broward, and Port St. Lucie, or St. Lucie. Just now, just to get an idea, Broward and Palm are identical. I don't even have to talk about Broward and Palm because the numbers are almost the same.
Identical.
What's that? What's that? I don't get it. What's that?
That's my
From
cousin
where?
Vinny.
Yeah, come on.
I don't remember that in my cousin
the
Vinny.
lime green.
Yeah, the lime green with the.
What is he saying about the tires?
The
Was
dual.
he saying about the tires?
It was something about the dual.
The poxy traction. I don't know.
Posi traction.
I think he was saying the tire, the tires on the car that left the track, whatever, and we're identical. Yeah.
Yep.
Mm-hmm.
So
skid marks, right?
Identical.
No.
Here it goes. I don't remember that part. I have to go back and watch it. I like that movie.
What do you mean? You haven't seen it like 10 times?
Yeah, but I don't remember the identical part. I don't remember that.
You must have been
I don't remember that line.
Did you say Ute?
Yeah.
What
Ute.
is a Ute?
What is a Ute? So median sales price in Palm Beach County is $600,000. Now last month it was 625, right? But year over year, and this is why it's always a tale of two cities, right? So pick your poison. So either we had a $25,000 drop from last month, or we're even from a year ago in July, right? So July of 2022, we were at 600,000. Now we're at 600,000 July 2023.
Are you sure you're not looking at last year's numbers?
Nope, positively.
Okay.
And Broward County is the same. 600 last year, 600 this year. Same exact number.
Okay.
1,100 sales this year, 1,100 sales last year. Same thing in Broward County. Okay. Now here's interesting.
The sentiment.
Even though we had about the same amount of sales, the value, or the total value of the sales, went up. By 10%. So we closed $1.3 billion in single family home sales last month in Palm Beach County, 1.1 billion a year ago, the same time. So we're 10% up from last year, even though the sales are the same. That's what we keep telling the buyers. is that the prices aren't going down,
Right.
and they're actually the houses that are being sold are actually a lot of them are going up because that's why we're having bigger volume with equal or fewer sales.
Well, then how come the median isn't going up?
Well, it might be where we might have had more multi-million
larger.
dollar homes, so the larger homes might have sold. We might have had larger sales.
I got you.
You know what I mean?
Yeah, I do. Yeah.
So
Thank you.
the other
'Cause
thing
in my
is
head, I'm like, well, how come that's not happening?
now
It's not an average.
No, it's not an average.
sale price to median list price right now is 96.1%. Last year at 98%. So we're getting 2% less than list price compared to a year ago. Days on market. Now this is the part I don't really I don't agree with this, but I know it has to be right, but it doesn't feel right, so I'm not buying it.
Because of your world, yeah.
Yeah, this is the thing I don't agree. It's saying that the medium time to get under contract is 22 days on market. And I'm seeing a lot of I saw one yesterday on the market, 524 days. Okay. And I've seen a lot of 180s. I've seen a lot of triple digits. I just don't see 22 days on the market
Do they
being the
do that?
median.
I was going to
the
say, did
median.
it as a median as well,
As
not
a
an
median,
average?
yeah, it's the median. So half more, half less than 22 days. So my 6 and 4 and 7 still blow away that average, but my 36 days on market is above, right?
Yeah, but if you're a busy agent and you're getting all your deals in under 10 days,
Yeah.
15 days, it's gonna.
Well,
Well,
most
yeah,
of my
22 is a
houses are
long
selling above the
runway.
96%
Oh, yeah.
list price to sold price.
Oh, yeah.
Pending
98%?
sales,
98?
1,200 a month this year compared to last year. I'm sorry.
You're 98%?
We were 98%, but I'm being real. We have a couple of houses coming up where we had to have price drops because of roofs or other serious issues. So it's going to hurt my statistics.
Yeah.
But there's nothing I can do about it. If you've got a hole in your pool, you got a hole in your pool. I
Yeah,
can't do nothing
yeah.
much about that.
But you're currently 98% list to sold?
Yeah, list to sold right now. And I'm usually way under the median days average. Now, pending sales, 1,200 in July this year, 1,200 last year. Pretty much the same. New listings, way less new listings. Last year, this time, we had about 2,000 homes being listed on the market that month. This year, only 1,400. That's significant. 600 homes less.
We need to get the sign guy back in.
Yeah, we do. We
Right?
do. Yes.
See what
yeah.
his plants to pulls,
Right.
you know.
And our active inventory is actually lower than last year. Last year, we had 3,800 single family homes for sale. This year, 3,400. So our inventory is not growing, which is not good for buyers.
Which is why the prices are holding.
Which is why the
Mhm.
prices are holding,
Yep.
right? So you just got to understand we're not seeing anything that's going to make this different right now. Let me just go in just for the heck of it. Now I'm kind of obsessed with this. Let's find out about foreclosures and short sales. Hold on, because there's so many pages of stuff.
While he's
in here.
looking for that, Johnny, you would think that as the people start overextending on spending and using credit, it's happening into 401ks, eventually that tap has to run out. Then are we going to see these default rates not spike, but are they going to increase just because people no longer have anywhere else
Any other option?
to get money? They just got at that point they have to stop paying bills.
I guess that
Seems like
that's one of those exits up there down the road, right? It
Yes.
does. You mentioned when Jim was doing a comparison year to year, he used the word about a sentiment from compared to a year ago.
Oh, sentiment. Yeah.
Sentiment for the buyers and even the sellers last year. I guess seller sentiment's probably similar. What was our interest rate comparatively?
So so that's what I was looking at.
Just because we're
Let's just
kind of
start.
in the
So
same
in
world.
the beginning of 2022, January is like 3.5,
348.
okay, 348. So then we go to summertime. So July,
yeah,
5.3.
Okay, but still,
So it had gone up 2 points. So when I mentioned sentiment, like buyers who were in the market at the beginning of the year got to the middle of the year and were like, "Oh my God, these rates!
I've lost the best of the numbers.
It's spiked.
Right?
When is the spike gonna stop?" They felt that 2-point increase. So now here we are, summertime a year later, and people who were the beginning of this year, what was it? 6.4 or something. So now they're up, a point less, a little bit less of a climb January to now.
Yeah.
But the sentiment was buyers were getting squeezed because prices were holding. And so I'm not surprised that the numbers are kind of equal. You'd said 1,100 total sales, because if there was good news in the market at that time, you would have seen sales increase. So I'm saying the sentiment for buyers and how they were feeling in that moment was, holy cow, we're getting crunched.
Just kind of been similar and maybe not overwhelmed, but that just continues.
It's just maybe a certain amount, just like, okay, we're not buying that.
And there's so many buyers out there that go, that house is overpriced. That house is overpriced, without having any factual basis behind what other buyers
say it all the time, and I just go, because I'm not going to get into it, obviously.
Right.
Not today.
But here's the thing. So if they were overpriced and people were getting loans they couldn't afford, we'd have short sales and foreclosures. So last month we had 1,154 sales for single family homes last month, July 2023. Out of those 1,154, 7 of them were foreclosures and 3 were short sales.
Yeah.
Now that's a huge spike, because a year ago we had 4 foreclosures and no short sales. So we went from 4 to 10. 2.5 times, 250% increase in or 150% increase in foreclosures. We have a crisis.
It's happening.
There's a crisis. It's happening.
Hey, an increase is an increase.
So the thing is, and I'm happy about this figure. This is a good figure. This means that people are making their payments.
Yeah.
The other thing is that even if these numbers started getting real, we had hundreds of them. Okay, hundreds, and before we used to have thousands, right? But if we had hundreds of short sales and foreclosures or something, there's so many, there's almost everybody has equity. So even if they dealt with the missed payments right away, they could not lose a lot of the equity that they have. The biggest mistake that we had in the last bad cycle where everybody was losing their houses, as they were watching that market just go crashing down, they didn't say, hey, it's time to get out. I'm afraid my house is going to turn upside down. Let's just sell it, break even, get out of here.
Figure out what's
and then
next.
do a reset, hit the reset button, right?
Oh, definitely. So, if like we talked about, if you're getting to that spot where you see the budget crunch coming and like the worst thing you could do is start missing mortgage payments and have that process begin, because that's going to impact you financially. It's going to eat into your equity position.
Sure will.
There's no guarantee that you're going to be able to keep your house through whatever the crunch is. And you're also limiting your ability to make the next move, right? If you wanted to buy again, maybe downsize, relocate, whatever that is. So definitely, I mean, we should probably take a whole 30 minutes and talk about that. Which is,
we're going to talk
about
this next week.
Don't be afraid to at least have the conversation. Like, what if we sell as something on the table?
Well, it fits into knowing your numbers. Like, those are all about your numbers all the way around. Whether you're comfortable with your numbers or you are starting to drown in your numbers, know your numbers and know that there's a fix, there's a plan, and losing your home because your numbers are drowning you is not the best plan. There's fixes for you, but you got to reach out. Know your numbers, know where you're positioning, know what you can possibly do. Go to floridatalkrealestate.com. Talk to pros. These are experts in their field, and they're here for you for 11 plus years now. This audience is amazing. This team is absolutely amazing. It's like peanut butter and jelly, perfect together. Pick up the phone, call 888-973-7828.
Creamy or chunky?
Oh, both.
Oh, wow.
Yeah.
Damn.
I'm a glutton.
Johnny's the banana. Timothy's the bread.
You got it. FloridaTalkRealEstate.com. The hotline is always there. Know it, use it, love it, and share it. Please, if you're on Facebook, hit the share button. Give a like and share, because you never know when someone might say, oh, man, been looking for a team like this. We got an open house today.
Open house, 715 Glenridge Drive from 12:30 to 2:30.
Beautiful.
Okay. Awesome.
Details
West Palm Beach.
On the Facebook page.
Yes,
Bob
sir.
is out there. Facebook page for Florida Talk Real Estate. Get the details for that open house.
And Sam just called about student loans. He's heard this thing. He's like, hey, I need student loan help. So Sam just asked to make an appointment on Monday to find out what's going on. Thank
Beautiful.
you, Sam.
Yes, this team can help you with so much involved with getting yourself positioned to buy a home. Student loan debt can be a big hurdle for you. And we got the best of the best Programs that don't get talked about very much. Well, let's find out if it's for you. FloridaTalkRealEstate.com. Mike Rauch, the mortgage guy from the mortgage firm. Have a wonderful weekend.
You too, Johnny. Happy anniversary. Tiffany, if you're listening, happy anniversary.
Very
awesome.
nice. Thank you very, very much.
Anniversary.
Jimmy D, have a great weekend, my friend.
Thank you. Going up to Fort Pierce, looking at investment properties, looking for some good deals up there.
Baller.
Yep.
For you, or
it'll be fun. For my investors, we have a bunch of people. We're looking for a multi-million-dollar lot to put a multi-million-dollar house on.
Let's go.
And we're also looking for really cheap duplexes up there. So we're going from one extreme to the other.
Beautiful.
It's going to be fun.
Best of luck. I know, yeah, I can see it in your face. You're excited about it.
Perfect place too. They're talking about putting the Buc-ee's in up in Fort Pierce.
Well, they just approved the Marriott at the Fisherman's Wharf. It was approved 2 days ago.
Nice.
Shovel ready now.
Royal Palm, kiss my ass. There's a Buc-ee's going into Fort
Yeah,
Pierce.
Buc-ee's.
Get out of here.
You said Buc-ee's, right?
Yes.
With a B.
Timothy, have a great weekend.
You as well, buddy. Happy anniversary to you and T.
Thank you, brother.
And have a great night and a great weekend.
You come out to Freaks on Parade Sunday. We'll have about 15 beers.
Oh,
actually, I'm kidding. I sneak in rum.
That's light.
Yeah, I sneak in rum. We'll drink a bunch of rum. Locker room's next. Hope you stick around. We'll be back at it next Saturday. 2 hours of infotainment. It's Florida Talk Real Estate right here on Real Radio.